Hello everybody, hope you're doing well. It's Lane here with MetaShackle. I haven't uploaded very many videos lately because I've been super focused on passing my Combine test to get my funded trading account, and that's going to be my focus for probably at least the next 2 weeks. I'm pretty close to passing phase 1, so depending on how lucky I get, I might pass it a little quicker than you think, so I'll start uploading videos as soon as I can focus on them. But I wanted to let you know that the new updated XRP breakout chart is also available. If you'd like to get a copy of this chart, which is basically the premise behind everything I've talked about and will be talking about in this video and in my past videos, called the XRP prediction, which was a series of 3 videos. So if you'd like to get a copy of this, you can just email me at metashackle@gmail.com and I'll send you a copy. So we had ourselves quite an incredible run overall in the cryptoverse since the elections. We saw XRP make a massive run up. Just like I had predicted in the XRP prediction videos, XRP came up taking out the buy-side liquidity all through the center area and up towards the top. Now I still think that we're going to make a little bit more of a run up here, breaking out of the top of this wedge, and we're going to take out these last 2 remaining highs of buy-side liquidity before pulling back. Now, just so you know, this is the weekly highs and lows on the monthly chart. But one thing that you'll see right from the get-go is now that all this buy-side liquidity has been completely cleared out in the center, and there's not very much remaining above, what this does is it leaves a massive pool of sell-side liquidity below old lows. Now this could be very dangerous, and I believe this is what's going to catch a lot of people off guard moving forward. Now what I would like to see is I'd like to see it make a run up, take out this liquidity here, pull back in the month of December and hold this level. Because if it does that, that will create the space that we need to form the fair value gap, which is the first 3 candles of the 8 candle set that I've been speaking about in the XRP breakout chart. So hopefully what we see in December is something similar to this, to where it will at least hold above that 75-80 range moving into January, so that this gap can form. Because if that happens, that means that the 8th candle will be in the month of May, which will likely be the breakout if this pattern repeats for a 5th time since XRP has been traded. Now there is a good chance, and I do think this is a major possibility, that sometime maybe mid-December, end of December, or early January, probably right before January, right before it switches to the next candle, we might see the liquidity run of the century here, to where the market makers, institutions, hedge funds, powers that be, whoever, end up crashing the price of XRP, bringing it down to these lower liquidity pools. This purple line represents the last liquidation candle that was on the XRP breakout chart. So it might hold above this, but there is a really good chance that it could break below this, seeking the sell side liquidity. They're not just going to take the price to $3 or $4 or above without clearing out this lower liquidity, especially now that they've cleared out all of this, because they need that rocket fuel to propel the price moving forward. Plus they want to carry those shares up with them rather than leaving them behind. So there's a good chance sometime maybe the 3rd, 4th week of December, we might see a massive liquidation candle coming down and taking out this buy-side liquidity. I personally think it's going to go down somewhere between the 25 to maybe 32 cent range if this candle occurs, somewhere in there. I don't think it'll come all the way down and clear everything out, but it could go to 17, 20 cents. Nobody really knows for sure. But I hope that this isn't the path that it takes, because if it does, it will not be able to form the fair value gap that we need and the 8th candle breaking out in the month of May. Now we could still see a fair value gap form here. Say it came down in this area and then popped back up and held low like this for the next set in January. So this would be a green candle. So say in January it held this low, held below that low right there. So assuming this liquidation candle blocked the fair value gap and it held below on January's candle moving into February, that could also form the fair value gap that we need. but that would push back 1 month the breakout month for the 8th candle. So rather than being in May, it would be in June. So what you'd likely see when that fair value gap formed, price would break out, start playing maybe within it, above it, but it's going to test and retest it a few times. And odds are when we do have the breakout, you would end up seeing something kind of similar to this, to where the breakout candle would actually kind of dig into it a little bit, absorb some of that liquidity, and then make a breakout. So there's a pretty good chance that we could hold high similar to this, which would be preferable because I'd like to see that fair value gap form as soon as possible. Because even though XRP has had an amazing run this month, this is still not the big breakout. The big breakout is coming mid-year. What we're seeing here is just an appetizer for what is coming down the road. Now, I know a lot of people are euphoric. If you look at the Fear versus Greed Index, we are heavily into the greed area, which makes it even more likely that this will fall. And it's interesting because people who are chasing this candle up in this area, and especially if it does make this move up here and take out this last remaining buy-side liquidity just above the upper trend line, you're going to have people chasing this all the way up, only for it to come back down, liquidate a lot of those positions, and cause a lot of losses. But if we get this red liquidation candle in December, towards the mid or end of December, fear will spike through the roof. And the people that were buying up here will be so afraid that they won't dare buy down here. And it doesn't make any sense because this is where you want to buy. You want to buy in the discount area, not the premium up here. So a lot of times when you're trading, you have to reverse the way you're thinking about things. If you're euphoric and you're feeling really good about a position, take half of it off or sell it. Now, if you're just sick to your stomach and you're leaning over the trash bin just about to spill your lunch because it's getting so ugly, that's when you want to start buying. Now, we have a tendency to do the exact opposite when we're trading. When we're euphoric, we want that dopamine hit to just continue, and we want to buy and buy and buy because we feel good. But when we don't feel good and we're scared, we just want to sit on the sidelines. So when your body is telling you to sit on the sidelines, it's time to buy. If your body's telling you to buy, it's time to cut your positions in half or sell. Always do the opposite, always. Because these institutions and hedge funds and big banks that trade these cryptos, forex, stocks, bonds, commodities, they know exactly how to push retail's buttons, push them into these false breakouts, and just take all their capital. And they are not the ones buying these huge buildings, these Lamborghinis, these 13 mansions. You know who's paying for those mansions? You are. I am. Retail are the ones buying all these luxury items for these bigwig traders because they take the money from our pockets and they put it in theirs. So do not let them do that. Now, there's no way that we can basically crush these guys. These big traders, they rule the sphere. I mean, don't think for 1 second that supply and demand runs what's going on here. The algorithm is what runs trading. This didn't break out because there was a massive amount of demand. This broke out because the algorithm was ready to seek buy-side liquidity. Now, that's why it might even be more likely that in December we will get this drop, because the algorithm, it's moved up, having taken out all this buy-side liquidity right here, leaving only a small amount up here. The algorithm is automatically going to flip to a sell model and want to start seeking sell-side liquidity. But unfortunate for retail, as all the sell-side liquidity is down in this range. The first reachable sell-side liquidity on the entire chart is sitting at 57 cents. Now think about that, because it's not just going to come down and take out one. If the algorithm comes down here seeking sell-side liquidity, it's going to take as much as it possibly can. It's going to chew it up. Plus we have fair value gaps right here that still have not been filled. And we have an order block down here which might stop the price somewhere around that 30 cents. But if it does break through this order block, it's at a minimum going to come down below these wicks and set a lower low. and basically sweep the liquidity right there. So like I say, 25 to 32 cents is somewhere, as far as the low range, that's kind of what I'm thinking. But don't be surprised if that thing shoots right past this. Everybody starts panic selling and panic selling and panic selling and freaking out, and it comes down to 22 cents or 17 cents or something. Because they're going to try and get as much of this sell side liquidity as they can when that liquidation candle comes, assuming that it does come. But I think it's going to. If you were an algorithm and your purpose was to seek liquidity pools so that you could gather up coins in order to deliver price down the road, where would you seek your coins at this point? Would you go up here to seek them, or would you move back down to the sell side? Because I guarantee you that algorithm at some point is going to flip, and it's going to start seeking this sell side liquidity, and it's going to be ugly. But for the people that are ready, can control their emotions, and have some cash or stable coins on the sideline, this area down here is going to be the buying opportunity of a lifetime. Because once that fair value gap forms and that 8th candle hits, you are going to see a green candle that is, for all intents and purposes, going to make you shit yourself. Now imagine loading up down here only to see within 2 or 3 months, 3-4 months, a candle that took us to new all-time highs. So definitely keep that as an option. It's not guaranteed that it's going to happen, but I guarantee at some point it's going to come down here and start to seek some of this sell-side liquidity, even if it's just down in this area. It doesn't necessarily have to go ballistic and go below the wedge, but it very well could. And I'll tell you, we've seen them do it in the past. I mean, once they get the sellers freaked out and everybody just starts panic selling, you've seen how quick these liquidation candles can just drop down. And when you when you think it's gotten to the bottom, shit, it'll go another 30-40% below that. It always has more potential than you ever believed possible. So definitely keep some dry powder on the sidelines, because these moon boys are all over X and Facebook and YouTube right now talking about, oh, it's going to melt faces and all this. It will, but it's not yet. It's not going to happen yet. First, we have to get the fair value gap to form. 3 candles create the fair value gap, followed by 5 candles breaking out on the 5th for 8 total. Once that fair value gap has formed on the XRP breakout chart, 4 subsequent candles, then the 8th candle will be the month that the breakout comes. And it's not going to happen before that. This candle could even come up here. I mean, it could come up to $1.80, $1.90. It doesn't matter. But we're not going to see all-time highs and these melt faces, quote-unquote, levels until that has occurred. Mark my words. Mark my words. This pattern has occurred 4 times in the past. Once every single time there was a breakout, and it is going to happen again. It's going to happen again. And there's very few people that are aware that there happens to be a recipe to predict the month in which it's going to happen. And the trick is to get prepared for that moment. You don't want to be buying up here. That's suicide. I mean, you sell up here. You reduce, at the very least, you reduce your position 15, 30%, whatever you're comfortable with. Because all of our investment and trading goals are different. I'm a long-term investor, but I'm also a day trader. I very rarely put on a swing trade because it just doesn't fit my trading models. And I very rarely hold a position for more than about 6 hours. A lot of times I hold them for maybe 1 or 2 hours. But my long-term holdings, I have no plans of selling that. Anything in cold storage is basically sitting in cold storage until there's about 50 mansions sitting in there. So keep an eye on things because it's about to get interesting. And I'll try to put out a few more videos. But like I said, I'm going to be focused on passing this combine so I can get this funded account taken care of. I'm trying to get all this done, get everything in place before this big breakout, because having an account funded at that level, it's going to be an incredible opportunity. So thank you for watching. I appreciate it. Have a great day.